Wednesday, August 4th, 2021, Monaco 64, home of alternative economics and contrarian views. Today we're going to look at a topic that I've gone over before. A lot of you will be familiar with it. The new viewers, of course, won't. And I have a lot of people asking me, how come gold and silver are not doing well? We've got a high CPI. It's not going to go away. It's not transitory. Well, I'm going to talk about how, in my opinion, one needs to hold on to their gold and silver for dear life. And of course, everything I say on this channel is my opinion. You need to do your own research. You need to do your own studies about the monetary system, about gold and silver, how they've been so important throughout the ages before you make a decision. I'm not here trying to convince people to accumulate gold and silver. I'm trying to show them that it's a very good protection, and it's been a good protection since the beginning of the century, despite the fact that the central bankers had inflation under control up until recently, and you'll see what I mean. But today, I've decided to look back at the 1970s, which is seen as a great decade for precious metals. It's seen as a decade where we had very high unemployment, slow economic growth, a stock market that really didn't go anywhere, and we had inflation. It was the stagflationary 70s that culminated in the massive bull market in the last few years of the decade, and in 1980 with gold and silver going to almost $900 and $50 respectively. So I still think patience is the most important thing, and for me, having gold and silver is about protecting my savings. I'd be kicking myself if I hadn't been stacking since I found out about gold and how important it is for the system in 2002. And I'm glad I was able to accumulate some gold and silver throughout the years. Yes, and it's very understandable that some people are concerned about gold and silver, especially people who just got into the market, people who got in last year when the market was going to new all-time highs, when gold got up above 2,000, when silver got close to $30. Yes, they have seen gold and silver correct for 12 months. Yes, I think we bottomed in March, but lately as well, we've been flatlining, going nowhere, gold and silver. But I want to show you what happened in the 70s. And of course, I was alive in the 70s. I was born in 64. But at that age, I didn't really follow the markets when I was a teenager, let alone I didn't really follow gold and silver. It was only later on that I started following markets when I started working in the markets. But by looking at the charts here from the 70s, I can see why very few people were actually holding gold and silver when they actually topped in 1980. And I'm going to show you why. And charts are always great to show you these things. So this is from bar chart. So if we start back in the early 70s, of course, gold was fixed at $35 an ounce. And then Nixon closed the gold window in 71. The overseas market, which is really the London market where physical gold traded, because in the US it wasn't traded, it was still illegal to trade gold, started breaking through that 35. That's one of the reasons why Nixon had to close the gold window. There's a rush for gold. So gold went from $35 an ounce prior to August 15th 1971, and it had even tested that level in the international markets back in 68. But let's start from 71. So it went from 35 all the way to 200 just by the end of 1974, as you can see here. This is a closing only chart. The other charts are not very clear going back that far. But yeah, I think gold got up to just above 200. And then as you can see, it corrected almost down to 100. So it lost 50% by August 1976. But if you look back to 1971, we were still way above that 35 level. But you can understand why people might have gotten frustrated with gold and gotten out, even though inflation was still rising, unemployment was still going up. Look at all the inflation that we've had in the 70s here with the CPI from the Minneapolis Fed. As you can see, it was raging throughout the 70s. It did slow down in the middle of the 70s, but it was still like 5, 6, 7, 8%. And the interesting thing is that, yes, we bottomed there in August 76, and we started going up, but it wasn't until August 1979 that it broke through 200 again. And then if you look here, back towards the end of 1978, it even retested that level again. And you can imagine how many people at that time said, well, I'm getting out. We broke back below 200s. But that was probably the worst time to get out. It feels a little bit like now that we tested the old high last year, the old high from 2011. We went above it, and then we came back down, and we've gone below 2,000 again. And I'm sure a lot of people are doing what people did back in the end of 1978. And then look at what happened after that. Gold went from below 200 almost up to 900 by January of 1980. So what I'm trying to say here is that patience is really important. You need to hold on to your gold and silver for dear life, especially in a precious metals bull market, in a commodities bull market. It's different than the stock market bull market. Stock market bull market, yes, sometimes it does accelerate in the last few years, like the dot-com bubble. But right now it's been different because it's been heavily manipulated, the stock market. But you can see here, you'd be kicking yourself in 1980 if you'd gotten out of gold at 200 because it retested that old high from 1975. You might have bought it at 150 and you said, well, I've made $50, I'm going to get out. And then you've missed out most of the move of that bull market. The same thing with silver. And silver, you have to go back to 74 as well. Silver topped there $6.40 according to this chart. Back in 71, it was trading around $1.50. So yes, you did very well holding silver throughout that period. But look at how long it took for silver to break back up above that 640 again. It wasn't until 1979. So what I would say is that from 74 up until 79, it was a great period to stack. And I guess people would have been probably laughing at you. Why are you buying silver? But I mean the move from, let's say, the beginning of 79 to 1980 was quite amazing. This chart doesn't go all the way up to 50 because it's a closing only chart. But so we went from below 7 all the way to 50, and you would have missed most of the bull market. Do I think it's going to take another 5 years for us to consolidate and eventually go up in gold and silver? it could. But looking at the gold and silver bull market that we've had since the beginning of the century, it looks like a slightly different bull market. I think where we are right now is like back in 1978, 79, when we were testing the old high from 1974, end of 74. That's what it feels like. Right now, we're retesting the old high from 2011 in gold and silver. We've had the tough years of waiting since 2011. Yes, that's where I think we are. And as I said, maybe we could consolidate for another 5 years. But if you look at the beginning of the bull market of this century, we went up even despite the fact that supposedly inflation was under control. And now inflation is not under control. The central banks and governments they've lost all sense of, how can I say, moderation. The stimulus, not only monetary but fiscal stimulus, are out of this world. So yeah, I would sit tight personally. I am sitting tight. The only other option is to put your savings back in the banks and finance big government. Big government is getting bigger by the hour, I would say. I saw what happened in New York City yesterday, what the mayor there wants to do. All the pressure they're putting on people, not only in the US, but here in the UK and everywhere around the world with these draconian rules. So yes, you can get out of precious metals if you don't have the patience or if you're concerned. But do you really want to put your savings into fiat currency that we know over time will lose their value? I'm sure a lot of people did that back in the 70s, unfortunately, and they missed out on huge gains towards the end of that bull market. I personally think the bull market in precious metals has a few more years to go. I think the dollar index, as I've said many times before, topped in 2017. The average leg up or leg down in the dollar index cycles since the 70s is between 7 to 9 years. So if you take 8 years, which is in the middle there, you add it to 2017, you get 2025. So I still think we got a few years in this precious metals bull market. Yes, we could consolidate for another week or a few months, but I think we're very close to where we're going to start moving. And people who got out after August last year because they saw gold and silver coming down and being frustrated, people who got into the market chasing the price, yes, unfortunately, they probably got out already, and they're going to be kicking themselves, in my opinion. And that's why it's always the best time is to buy when you're fearful, when the sentiment is low. And I would say it's pretty much like that right now for precious metals. And if you look at silver, we haven't really corrected that much, because last year we went from just below 11 after that big drop in March. We went to almost 30, and we're pretty much near 30 here, being at 26. Prior to March last year, silver is trading basically between 16 and 18. So yes, we need to look at the bigger picture, be patient, look at how the 1970s was not a straight line up for gold the whole time. Yes, in the beginning it was consolidated, and it was only towards the end of the bull market that it really took off. And of course, Paul Volcker basically saved the fiat currency, the fiat dollar, by allowing rates to go into double digits. Will there be a Paul Volcker coming up in the next few years, saving the fiat currency system? I don't think so. I think the current system is too far gone to be saved. So that's another reason to hold on to your gold and silver for dear life, in my opinion. You should do what you think is best for you, really. But if I can help give you some insight into it, I will have done my job, I think. So now let's look at where the markets are this morning. It's 8:40 a.m. London time. So let's have a look here. We've got spot gold, 1814. It's up $4. Range has been 1808 to 1815. Maybe, maybe it doesn't help that we look at the markets every day, but some people do like to look at the markets every day. And the reason I do this, and I've done this since I started my videos, is what I used to do when I worked in the city. I had a few clients in the US, institutional clients, and when it was 6 or 7 o'clock in New York, a lot of them got in the office that early. They wanted to know what was going on in Europe, in London, and that was part of my job, to tell them what was going on, what had happened. And I thought that the general public, especially in the US, would like that kind of thing, and I think a lot of you do. So let's continue. We've got spot silver up 20 cents at 25.70. The range has been 25.73 to 25.47. The Dow futures is up. I almost said up because it's been up every day almost, but it's down actually. The Dow futures down 28. The Nasdaq is up 19. S&P is down a couple of points. So not much happening in the futures market here at the moment. The FTSE is up 28 points at 71.37. The currencies, sterling is up 0.2%, 139.42. The euro is up slightly at 118.71. The dollar is unchanged versus the yen, Japanese yen, at 109.10. Dollar is down about 0.2% versus the Chinese yuan at 645.50. Aussie dollar is up 0.25% versus the dollar at 74.15, and the dollar is down 0.1% versus the Canadian dollar at 125.17. WTI crude is unchanged at 70.32. High grade copper unchanged as well at 4.37. And to finish off, the fake 10-year yield, treasury yield, is at 118. That's unchanged. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.